Hi, good evening everyone. Today we'll discuss GST Session 2, monthly return, GSTR 3B, filed on 20th of every month. This is the summary report which contains input as well as output. GSTR 1, output, GSTR 2, input, GSTR 3, final. What is nil rated supply? Nil rated supply is a supply whereas rate is nil. No registration under Section 23 is required. GST law is applicable on such goods. Exempted goods are exempted by government notification. No registration under Section 23. GST law is applicable on such goods. Non-GST, non-taxable under GST. No registration under Section 23. GST law not applicable. Petrol, alcohol, electricity, etc. If reverse charge mechanism under Section 9(3) applies to the entity, then the company would have to mandatory require registration under Section 23 for the points 2, 3, and 4. Central GST Act defines exempted as nil rated, wholly exempt, non-GST. As CGST Act defines exempted goods, hence, if Section 9(3) RCM is applicable, then mandatory registration for all three. B2C transactions for output supplies UN holders are unique identification numbers for embassies and government. Excise is CGST Act, Service Tax is CGST Act, VAT is SGST Act. CGST Act Section 23 registration shall not be liable for registration, exempt goods not liable to tax, agriculture rest. Section 22 liable to get registered where he makes taxable supplies exceeding the specified turnover on 20 lakhs in a financial year. For special category states to be 10 lakhs. Who is registered under existing law needs to be registered under GST. Mergers and acquisitions turnover shall include all supplies made by the taxable person. Notwithstanding anything contained in Section 22, the following person shall mandatorily require registration: interstate supply, taxable supply, tax under RCM, casual taxable person, a non-resident taxable person, input service distributor, person who supplies goods to e-commerce operator, and e-commerce operator. Once registered, taken under GST Act, and then GST is to be charged even if the turnover is 1 lakhs in the subsequent years. IGST Act, Section 7, interstate supplies shall include supply of services or goods imported shall be treated as interstate supplies. Supply of goods and services exported shall be treated as interstate supplies. Section 7 and 24 hence mandatory registration for imports and exports. CVD, excise, SAD, VAT, both subsumed uh, in GST. Prior to GST, import value plus BCD plus CVD 12.5% plus SAD 4%. Post GST import value, BCD since it is not subsumed in GST, cess plus IGST. IGST on imports and export is charged from the Customs Act. If applicable from GST Act, then central government share would be 9%, state government share would be 9%. As it is applicable from Customs Act, hence 18% would go to the central government. Section 7 of the CGST Act, uh, all forms of supply of goods and services, sale, transfer, barter, exchange, license, rental, lease, disposal for a consideration in course of a furtherance of business. Import of services for a consideration whether or not in course or for furtherance of business. Composite and mixed supplies. Composite supplies are two or more supplies naturally bundled. One of them is a principal supply. Tax rate of principal supply would be applicable to both principal and non-supply. Mixed supplies, two or more supplies for a single rate of GST on products with maximum rate would be applicable to all products. Example, Diwali basket rate of GST, which is highest rate, would be applicable to all the products. GST Act extends to whole of India. Section 7 talks about import of services, hence import of goods governed by customs law. As import of goods is governed by customs law, hence the payment of tax and refund to be governed by customs law. Whether credit available on IGST charged on import of goods. Section 262 input tax in relation to a registered person includes CGST, SGST, UTGST, IGST, and includes IGST charge on import of goods. Hence, from the above, it is clear that credit is available on import of goods. Import of services is governed by the GST Act. GST has three types of transactions: intrastate within the same state, CGST and SGST; interstate, IGST, 100% central government, with different countries, IGST, 100% central government; combination of CGST plus SGST and IGST. CGST plus IGST is not possible, SGST plus IGST is not possible. Haryana sells to Haryana and further sells to Haryana. Then CGST, LGST in the first transaction is 20 and CGST, LGST in the second transaction is 40. There would not be double taxation as output tax liability would be 40 and there would be input tax credit of 20. Hence net 20 would have to be paid. Vendor Delhi, manufacturer Punjab, wholesaler UP. IGST charged by the manufacturer is 20 and IGST charged to sales to wholesaler is 40. So output tax liability would be 40, input tax liability would be 20 and 20 would have to be paid. Vendor manufacturer Haryana, uh, wholesaler Delhi. IGST would be 40 less CGST 10, less input tax on SGST 10, net payment 20. IGST having share of central government and state government, hence can be adjusted with CGST first and then with SGST. Vendor Haryana, manufacturer Delhi, IGST 20, wholesaler Delhi, CGST, SGST 20. CGST 20, IGST 20, payment nil, SGST 20, input tax credit nil, payment 20. IGST paid to central government, hence it is to be utilized first for CGST and then for SGST. Delhi, customer Goa, VAT, under VAT, say warehouse, the transfer was supposed to be made to warehouse in Goa, and then from warehouse to Goa to customer sales were made. Transfer from Delhi to warehouse to Goa was not a sale, and Form F to be provided. Hence, no tax was charged. Prior to GST, company had to maintain warehouses in different states so that customers could get the VAT credit. Post GST, the same is not required. The sale can be done and and the person would get a full credit of input tax credit. With the advent of GST, there has been reduction of 95% of the occupancy of Central Warehousing Committee Corporation. Haryana D1, Haryana D2, customer Haryana C1. Outside purchases IGST 10, local purchases CGST SGST 5, CGST SGST 12.5, and CGST SGST 14. CGST 12.5, SGST 12.5, less CGST 5, 5, uh, less IGST 7.5 and 2.5. So the tax payable would be nil and 5. And in the second case, output tax liability 14, CGST 12.5, SGST 12.5, hence tax payable would be 1.5 and 1.5. Haryana local purchase CGST, SGST 5, interstate IGST 10, IGST 25, IGST 25 and CGST, SGST 14. IGST 25, less CGST 5, less SGST 5, less IGST 10, tax payable 5, CGST 14, SGST 14, less IGST 14, and less IGST 11. Tax payable would be 3 in SGST. Order of adjustment: IGST first IGST, then CGST, then SGST, CGST first CGST, then IGST, SGST, then first SGST, and then IGST. Concept of dual levy: Indian Constitution is federal and powers are divided between central and state. Hence, dual levy in India laws are applicable for center and state. Constitution of India, Article 246, whole law. Article 246A, notwithstanding anything contained in 246, central government and state government of every state has powers to make GST law. Number of laws: CGST Act 1, SGST Act 29 states, 29, 2 union territories which have power of states, 2, UTGST 1, IGST 1, Compensation to States Act 1, Total Acts 35, CGST and IGST are same, SGST and UTGST are same. As there is a dual levy, hence state-wise registration required where taxable supplies are made. State-wise utilization cannot use ITC for Delhi for Haryana. Airtel registration in all states, approximately 1100 returns in a year. Although tax is destination based, but registration is origin based. Hence, registration is required from where the taxable supplies are made. GSTR 1, outward supply, place of supply is not mentioned. Return has to be proper. GSTR number, place of supply. Place of supply cannot be determined on the basis of the GSTR number. This brings us to the end of the session. Please do like, subscribe the channel. Thank you so much.